Hi, Shadrach. So when do we say an asset is impaired?
An asset has been impaired.
Yeah.
Okay, so impairment is when the carrying amount of an asset is higher than the recoverable amount. Now, the carrying amount is the cost of the asset less any accumulated depreciation, and recoverable amount is the higher of the value you use or the net realizable value. And here's the catch. Anytime we acquire an asset, we expect to generate revenue from that particular asset. It's either the asset helps us to generate revenue, that is when we use the asset, or we get funds from the asset when we dispose it off. Now, because we are finance professionals or we want money, we would compare what we will generate if we have to use the asset against what we will generate if we have to dispose of the asset, and we will pick the higher of these two as our recoverable amount. What you also need to remember is that the amount that the asset will help us generate are future cash flows, and because we are making our decisions now, we have to discount these cash flows, right? So you discount the cash flows, compare it with the net realizable value, that has to do with the fair value of the asset, less any cost you have to incur, and that amount becomes your recoverable amount. And then you compare your recoverable amount with your carrying amount, and if your carrying amount is higher than your recoverable amount, then the asset has been impaired. Have you been answered?
Thank you.